You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. It is Tuesday, July 21st, 2020, and thank you for joining us here. We are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate, and we're having a whole bunch of fun looking at what the market has been up to these days amid COVID so that we know as investors where to make our next move. And today we have some wonderful content. We're going to start off talking about house prices. RE/MAX just unlocked a report that identifies the fastest growing neighborhoods in Toronto right now. We're going to cover a little bit about what they have to say. And then we're going to transition into rental apartments. Are rental apartment builders optimistic about the rental market? As investors, you're either going to be flipping or doing some kind of trading of real estate, or you're going to be investors, which is a good chunk of you out there. And if you're an investor, you want to know, is there going to be a future for rentals? And where is a better place to look than the people in the process of creating them? Are they optimistic? And what is the strength of consumer confidence in Canada? I knew a guy, speaking of confidence, who was balding. He was losing confidence, man. So he had a rabbit tattooed on his scalp. People tell him from a distance it looks like hair. We're having some fun here. I know. It's kind of rude to laugh at the idea of balding. Sometimes a cheap hairpiece from Walmart is all you have to help yourself confidence. I guess you could say it's a small price to pay. We're going to have a lot of fun. Thank you for joining us once again. Hit that like, hit that subscribe. We're going to continue to have lots of fun. And really, if no one's getting any value, you know what? That's okay, because I'm learning myself. And that's really been the motivation behind putting this podcast together, to add value to my clients. So our top article of the day today is blogto.com. Here's what the article is called. Here's where house prices are rising the fastest in Toronto right now. Here's what they say. A limited supply of houses for sale paired with rising demand as COVID-19 pandemic restrictions lift have caused real estate prices in Toronto to skyrocket over the past few months. It's funny because 2 months ago, if you even indicated anything like that, you were, oh man, witchcraft, baby. And nowhere has this been observed more accurately or acutely than on the detached housing market. We're going to talk a little bit about segments because this report doesn't do it. But here's what it is. RE/MAX freshly released 2020, I love the name of this, Hot Pocket Communities Report. I'll have myself a RE/MAX Hot Pocket, please. Shows that single-family detached homes appreciated in value in, listen to this, 95% of Greater Toronto real estate districts, right? Over the past half year. 55% of them, listen to this, by double-digit values. Incredible. Now, we're talking year over year. We're not talking from the March highs, obviously. And RE/MAX is, of course, an optimistic news source if you want prices to go up, as is any victim of being a real estate professional, including myself. After examining trends and developments across all 65 Toronto Regional Real Estate Board districts, analysts from the company found that, quote, a steep decline in the number of homes listed for sale during Ontario's state of emergency contributed to a notable uptick in single detached housing values. Guys, I find this absolutely incredible. It feels like just yesterday we were at a crossroads where we're like, okay, everything has halted, right? Number of sales are dropping like flies. Inventory is dropping like flies. What pops up first? Where is the rising hot pocket? Is it going to be on the supply side or is it going to be on the demand side? I anticipated it was going to be that there's going to be a shortfall on the supply side and therefore would be increasing demand, which obviously was counterculture at the time. And that is precisely what ended up happening, right? We ended up seeing further declines in the number of listings because as it turns out, people are more comfortable going and looking at your house than they are having you come to mine. And that has been kind of the hallmark for 2020. Roughly 14,000 active listings were on the market as of June, according to RE/MAX, representing, listen to this, the lowest level for the early summer months since June of 2016. So we have active listings down, right? Active listings are down. Strong demand characterized much of the first quarter of 2020, setting the stage for a record-breaking spring market in the GTA, and then came COVID. if you look back, I actually did a predictions video for 2020, which is super old news now. But many people were forecasting 2020 to be a great year. 2019 was really a boring year. But 2020, man, were we ready? We thought we had clear vision, but 2020 really deceived our eyes, right? In past downturns, a drop in unit sales has usually been followed by a significant upswing in the number of homes listed for sale. That's what we were hoping for. But that didn't happen in this case as buyers and sellers paused in April, then cautiously resumed home buying activity as COVID-19 cases dropped and local economies reopened. Hence our problem. You've probably seen it. Hindsight is 2020. Remax and other agencies expect that home prices will only continue to rise. I love it says only continue to rise in the third quarter as more emergency orders are lifted. What is interesting about this article before we get into kind of sharing the highlights of what I'm seeing when I'm looking at the map that they've given in their Hot Pocket report is not all housing segments are equal here, guys. This is overall house prices. The other thing to mention here is they're saying the third quarter. That is July, which is halfway through, August, and September. And I would agree, those are looking up. If we were to continue all three of those, September, we're getting a little bit iffy. But Q4 is really what I'm concerned about. That's what I'm concerned about. If you have invested, you're going to see, more than likely, depending on the segment, you're going to see price increases between now and August, maybe September. Later in the year is where we're going to see naturally seasonal declines, and we're going to see potentially other unusual declines. Things like evictions, right? Things like CERB. These types of things. Or maybe an uptick in cases, which we've been potentially seeing. With the easing of restrictions and the province moving into the third and perhaps final phase, we anticipate that the housing market will likely accelerate. So I do agree. Months of inventory in general is dropping, with the exception of townhomes, which is kind of relatively flat, and condos, which is actually rising. So we got to be very careful. And here's how they say it in this article. Detached homes are where prices are rising the most quickly, particularly in the downtown core. That's it. So there's no details here. What this article does is it highlights various GTA neighborhoods. I encourage you to go and check out your area. But the notable number one is Yonge St. Clair, Annex, Casaloma, and Wychwood. CO2 with an increase of 25.7%. Right? That's a massive increase. Okay? So if you want the full list, go online, go check it out, BlogTO. Get that Remax Hot Pocket report. But when I look at the map, because I have like this pretty little chart, I can kind of tell you broadly, the entire East End, okay, is up over 10%. And there's only 3 that are blue on their map, which indicates they're 0.1% or lower. In other words, they're dropping in price. Only 3 out of the entire list. So more likely than not, you're doing well. I think what people are missing from this article is that housing types really make a difference. But keep your eyes peeled, guys. Keep your eyes peeled on the condos. Not all housing types are created equal. GTA is doing super across the board. Some people ask me, outside of Toronto, because obviously that's what we focus on, but we have listeners all the way across from Windsor. I've heard comments. People from Ottawa have commented, and they get a lot of value because provincially we are often on the same page, right? And a lot of these markets have similar characteristics, and you want to know what's going on. So that's great. It's very difficult for me to identify specific areas. Like recently I had someone asking about King City. If I were just to say this, guys, I am far less concerned about the GTA right now because the GTA is doing great pretty much across the board. I mean, we've got even the number of sales of condos are down, but prices there have not been impacted to the same caliber as they are in the city of Toronto. So I would just say if you're not in Toronto, you're doing fine. Toronto is the one that is most impacted and has the highest fluctuations up and down, and it will also be the place on the tail end of all of this where you're going to find the hottest pocket deal. Sorry, I just want to get my hot pocket word in one more time before we move on. Well, I saw an article from the Star. They say the price of your home in Toronto or GTA keeps going up and up, defying COVID crisis. People are very optimistic. We're going to talk about that, maybe not completely, but people are generally optimistic that prices are going to continue to go up, whether you like it or not. But we'll see. Q4's coming. Let's move on to topic number 2. If you are an investor, you're considering investing in real estate. We've talked recently about this disconnect as far as rentals go between small investors that have condos versus big purpose-built rental apartments, which are actually on the uprise and recovering their rent drops very quickly. And so it's pointed me to this article that came out, Financial Post. They say rental apartment builders bet on quick rebound in Toronto with construction at near record levels. I feel really bad for people that have condos that are small-time investors. Even if you don't have it as a rental unit, you have a condo. And so as we lose cash flow, or as they become less desirable as an investment, it's going to impact your property values, even if you're holding a condo. But apparently, the rental apartment builders are still confident. There's a lot of confidence there. Here's what this article says. The COVID-19 pandemic has slowed the flow of people into North America's fastest growing city. It hasn't stopped Toronto's bullish developers from banking on a quick recovery. Construction of rental apartments in Canada's financial capital is near record levels despite a decline in immigration, because we know immigration is a huge driver for rent. In the second quarter, 13,358 units were under construction in the Toronto region, close to a 40-year high, according to research from real estate consulting, right? So you could say, well, you know what? A lot of those came from last year, but that's not where it ends. More than 3,000 new apartments were proposed in the past 3 months. Lower than the first quarter, but a 45% increase from the same period in 2019. In other words, since last year even, we are seeing an uprise, an increase in the number of purpose-built rentals. The government is subsidizing these things, and we have to. We are trying to build housing we simply can't keep up, and this is one avenue to do it. So there's free money being handed to these guys, and they are obviously confident with vacancy rates we've seen in the past. According to Urban Nation, we recently saw in Toronto 1.1% vacancy. I swear that number was below 1, but regardless, that is super low. That is super low. They actually had the numbers for you, New York here. Listen to this. Manhattan, 3.7% in June, right? We are doing pretty good, but developers see no reason to slow down. The market will absolutely bounce back. That's what they're saying. I'm optimistic we will see it flatten out by fall, and hopefully by the end of the year, new year, we will experience a recovery. Talking about rentals. People will say, well, what do we need recovery for? We're talking about rentals. Rentals definitely need a recovery. There is two very different stories happening in our market for those segments. Vacancy rates in Toronto have been structurally low for a long time and have been trending down really most of the past 20 years. This is why they've been so desperate to try and get purpose-built rentals. Stop building condos, start building purpose-built rentals. We need housing. We don't need ownership. It's different. There's an understanding that over the longer term, immigration will rebound. Do you guys disagree with that? We're already seeing immigration and permanent residence number increasing quite rapidly. The job market will recover and rental demand will ultimately continue to exceed the amount of new supply that's being delivered. I don't disagree. I see it. We've seen purpose-built rentals are increasing in price, as mentioned. Small investors, i.e. those who own condos that are trying to rent their unit, theirs are still lower. They're still lower than they were last year. In fact, they're probably still going down. It'll be very interesting to see this month. But they're dropping slower. They've slowed the speed by which they're dropping, which is good. Maybe we've reached a bottom and we're starting to see an uptick in people saying a little more confident. You got phase 3 opening, and maybe we've reached a bottom for rent rates. People taking advantage of other discounted rents and jumping in. Who knows? But for the purpose-built rental guys, they're offering incentives to people, get 2 months free rent or whatever, and their rent increase, they're actually increasing their rent. They're doing well. But then we've got articles like this, as before we jump into our last topic with the Star, right? New rent repayment rules could lead to a flood of evictions. We've talked about this in the past, right? We're making it easier to evict these tenants that aren't paying their rent. They've got a death wish, according to some of the rules that are coming down, and some people are seriously freaked out and trying to educate tenants on their rights as tenants when it comes time to negotiate with their landlord, which is not completely off the table. Could be next month. More likely, we're getting really tight. I don't know if they're going to announce it this late, but maybe. I don't know if we're 50-50 anymore, but in the next couple of months, you're going to see the eviction ban be lifted. For any of you investors out there, I love this article. It is a side article to real estate, but it absolutely applies to you, especially those of you who want to be in the high net worth. Listen to this. Advisors prepare clients for anticipated tax hikes. I know we talk about municipality tax hikes all the time, but what about federally? Well, we know that the deficit for this fiscal year is likely to surpass, they've said, $343 billion. Billion. It's like Dr. Evil. $343 billion. The amount is proportional to the Second World War era government spending. And it's almost double the federal debt in a single fiscal year. So what's happening is some of these financial planners for high net worth people are starting to position themselves in anticipation for tax increases. How are we going to pay for this? Right? Don't be ignorant to the fact that it's got to be paid for. That nice little CERB check, you think that was free? No. They're saying this. This is their thoughts of what could happen. Top federal personal income tax brackets could increase to 36%, which is at 33% today. This is just federal, guys, just federal. And a new estate tax and an increase, which would be annoying, and an increase to the capital gains tax from 50% to 75%, which effectively it halves the tax-free portion of the capital gains. If that were to happen, that would immediately, you'd want to sell the properties that you've been kind of wondering, should I sell them? It was only a few years back I was thinking, can we remove that or reduce that? But now, thanks to COVID, thanks to the happy trigger finger and launching $343 billion into the economy, we're going the wrong direction when it comes time to sell. As it stands here, even today, you get opportunities and you make money when you buy, unless you're looking, you have an exit strategy. I was just actually talking to big time investors that give ideas like this. Here's a tip for you. Instead of selling the property, buy it within the corporation and sell the corporation. Save yourself some land transfer tax. Good ideas. People are doing very creative strategies out there in order to avoid taxes. But the reality is taxes are going to go up because the debt went up. All right, let's go into consumer confidence, guys. BNN Bloomberg.ca, 4 months into crisis, consumer confidence stalls in Canada. Come on. Have some confidence in yourselves. Canadian consumer confidence remains fragile 4 months after COVID-19's lockdown went into effect. Telephone polling shows people still use telephones. Hi, I'm calling on behalf of Canada. I would like to ask if you're confident in the as a consumer here in our market today. Don't call me. Sentiment around personal finances, job security, and economic growth rebounded in May and early June from record lows, but improvements have since stalled. Only a recovery in the outlook for real estate is keeping broader confidence levels outright declines, right? Everyone else isn't confident, but real estate, yeah, we're pretty confident about that to some extent. Bloomberg Nano's Canadian Confidence Index, sounds so fancy, a composite measure of financial health and economic expectation, ticketed higher to 46.7 last week after falling slightly the week before. The index has hovered around current levels since mid-June. So we haven't seen consumer confidence rising since mid-June. The numbers suggest that it has plateaued well below pre-pandemic levels. That's consistent with what the Bank of Canada is saying, that the rebound from a recession will be slow and gradual. So the Bank of Canada thinks it, and consumers think it. And where do you think they're getting their news? They're getting their news from the Bank of Canada. They're getting their news from idiots like me that can't shut their mouths. And we see things like this. Straight.com. Uncertainty clouds Canadian housing market outlook despite bright summer bounce, according to RBC Economics. If having low confidence was an Olympic sport, we'd probably get bronze. Have some confidence. I've got some buyers with properties that I have listed, and I am noticing that there are people even now, despite, expectations of probably growth this month, we're still in the middle of spring, they're getting cold feet. I'm seeing that. CMHC predictions are getting to their heads. Family and friends are getting to their heads. Damn these rules where you can go spend time with your friends, making them wake up. There's still a bit of fear out there. And I think it's rightly positioned. Like, I don't disagree with that thinking. So just be very careful, guys. Be very careful. Know what segments are doing hot and what segments are doing not. You got hot pockets, but hot pockets, eventually they're done, right? And you got to take them out of the oven. Durham, York, and Halton regions entered stage 3 on July 24th. Who puts hot pockets in an oven? That's a terrible idea. Micro. The province has announced, you guys probably heard this news, that Durham, York, Halton, Hamilton, Niagara, Haldimand, Norfolk, and Lambton regions will enter stage 3 effective this Friday, July 24th. However, Toronto, Peel, Windsor, Essex will be held back to stage 2 for at least one more week. They've pretty much said we're not doing it this week, and I don't blame them because we're seeing an uptick in cases in these areas. The provincial prohibition. So how does this impact open houses? This actually comes from an article directly from, I believe it was Treb. I think Treb sent this email out. Yes, they did. And so they're saying that in-person open houses in York, Halton, and Durham regions will be lifted, obviously, in line with stage 3. But Toronto, Peel, and Windsor will remain in stage 2. We knew this, but I love to add the rubber stamp of approval from Treb. They tell us that they are working right now to send us a guidance document for the realtors. They say they'll share an open house guidance document for members tomorrow, which would be today. So if there's anything of value there, guys, I'll share it with you. But ultimately, TREB is still, this is what they say, recommending that members continue using alternative marketing strategies for sellers, such as virtual open house tours that can easily be accessed by buyers, and to conduct in-person open houses as a last resort. If directed by a seller to conduct an in-person open house during stage 3, members should comply with all required government and public health and safety measures to ensure safe showings, and this will be addressed in the guidance document coming soon. And we all know they reaffirmed you can have a limit of 50 people, right, indoors. That's quite the open house. And 100 people, 100 individuals if you're outside. And for social distancing measures, you're allowed a number of physical up to 10 people. So you guys know these rules. So they're just letting the membership know. So things are reopening. Confidence should be coming back. Maybe it's not as much, right? Hopefully this podcast, honestly, helps with building your confidence about what comes next in our market. If not, just go do some basic carpentry or something. I know when I do, put together an IKEA thing, I feel really proud of my shelf. They say confidence is key. I guess that's why so many have been locked out of the recent gains we've seen through COVID. Just be very careful as we round Q4. I hope you guys have a wonderful day. We'll be back tomorrow with more. Take care and keep it real.